Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps lots. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. Alright folks, here we are after market close on Wednesday, May 11th. We're going to take a look at SoFi. So SoFi, as you know by now, had its earnings leaked yesterday, sort of midday. You see this 11:20 candle, and then this gap up to at this 2:20 in the afternoon candle. So it was halted for that period of time because of the leak. So pretty wild uh, course of events. I mean, and then it was relatively flat um, into the after hours, and then during the pre-market when everything was drawing down after CPI came out. Um, and so it sort of came in, pretty flat. Like it ended the day yesterday. It closed this candle at 525. Yep, we're in the fives now, as you know. It opened this candle at 520. So all of that, all of this insanity because of this leak that came out, and then it just sort of like pricing itself um, to where it would want to be based on the leaked earnings. So this kind of didn't do much of anything. Um, and but of course then you have the earnings call and stuff like that, and there's more context and color that's provided, and that can still certainly move a stock. But today up over 4.5%, while the market's still getting absolutely slaughtered. So that was good, but just sort of like keep in mind, keep in context. Like this was the last earnings. We jumped up in March a bit, and then just like very quickly came back down. The one prior to that, it's going to show me here. We had, this one, we had this big move up here, 12.5%, and then quickly lost that. That was in November. And then there must be one that I'm missing. But in any case, this is just to sort of say, any recovery or any green bullish movement that we get may very well be temporary, as most or all, I suppose, upticks in SoFi have been for the life of SoFi in the public market. So just, keep that all in mind. I was hopeful for this break here, as you know, and then, I mean, I of course can't say that all of this is SoFi's fault, right? Because the market has been absolutely atrocious. So do the best that we can to continue to put in levels and just kind of work with it as best we can, since we're like well below this $6 level that we had put in. Now, if I hadn't mentioned this before, I'll mention it now. I think it's probably pretty true. Probably the most honest kind of interpretation that you can have, just because of the psychological components of it, is probably 5 and 550. Right? So I'm just going to put those as markers. There's not a whole lot else that jumps out this level, kind of. But, unless we want sort of like an intermediary level, if we start to get a lot of action between 550 and $6, maybe we'll put in a level right here around 580 would make sense to me. And then something here around, 566, or maybe down to 560. Once we get more candles, more price action, that'll become a bit more clear. So if we start bouncing around these levels, then we'll put in more sort of concrete levels. But I honestly just think for now 550 and $5 are just where it's going to be at. And like I said, if we decide to put in a bunch of price action between those levels, then we'll sort of sort out the minutia as we get into it. But that's where we are at the moment. I mean, this is trying times for sure. I mean, it's insane. It's crazy out there. I mean, could have been Upstart, right? Could have been Affirm was getting absolutely obliterated today as well. So, we're just going to have to see, but it's just an absolutely unforgiving market and sentiment out there at the moment. So I wanted to take a look at short data since we haven't in a very long time. And I looked at Ortex earlier. I think their estimate for the day is around 22%, sort of in line with some of these other places that we'll look. But I wanted to start off here at iBorrowDesk. We did this a lot in the days of IPOE, and I thought it would be good to come in and sort of take a look. Now, I don't know if there was a long sort of glitch here on iBorrowDesk, because there was a long time where I wasn't really looking at it that closely. And I don't know if that's why this is just stuck at 10 million for many, many months. I don't know. But in any case, you do see as of late, as these available shares are coming down, that's because short sellers are selling them into the market. And so you see that activity really sort of picking up recently, including today. So today, on this 15-minute data that they provide, you see a whole bunch that sort of closed up shop, right? And so maybe that's sort of contributing to the bump. And then we see sort of like a bit after noon, we see a huge drop off in the available shares. So nearly 3.5 million shares immediately coming out to sell short, and then that sort of holding steady, ultimately finishing up 3.5 million under the high point here. So, and the fee ticking up a bit. I mean, this fee is not anything that's going to sort of enhance or help create a short squeeze, but I would keep an eye on it. If it does, at least it's moving, because we've seen it before where the available shares will come down and sometimes come down quite significantly, and then the fee is just staying very, very flat. So 3.7% is not where we're going to want it to be at. We're going to want it to be 50s, 60s, 70s at least, in order for it to sort of put pressure on the shorts to want to, well, on our side, it would look like a squeeze, but for them, it would be closing up shop. So we'll keep an eye on that as it goes along. To me, the percentage of the short float is in range. We could get something squeezy feeling. FinViz, which in my experience, again, it's been a while since I looked consistently, but they've often been much higher than other sources, but they're showing 23.4. FinTel showing just under 20. Barron's, which I actually hadn't seen come up before, but they're around 22, and MarketBeat, which is really has become very challenging to use with all their pop-ups and do this and do that for me. It's as of 4:30, they had it at 22.8, and it's right about there still at this moment. Maybe they just copied that over, I don't know. But you see it's been spending quite a bit of time here in the 20s really since the end of February, and the days to cover kind of upticking as well. So that's certainly putting a lot of pressure on, right? You see back here there wasn't very much. So maybe those 10 million available are relatively accurate on iBorrowDesk. I don't know. And again, I think that feed just comes from Interactive Brokers, if I'm not mistaken. I'm going off of memory, and the reason it may be 10 million is just because they, as a broker, just have 10 million, and that's why it's that sort of like very clean round number. But in any case, you see this huge number of total shares sold short, right? So now getting up into the 144 millions, and much, much higher than we've seen in recent past. So it's definitely on the uptick, at least leading into May. And it appears to me like they were jumping into to add additional shorts into the market today for SoFi. So I think that we're going to continue to see this uptick as far as I can tell. And we'll see if we can get ourselves back over like the billion mark, like you see it over here. So that'll be kind of interesting to just keep track of and keep an eye on. Like I said, I don't think I'm certain that the criteria is not really there yet to get anything like a squeeze going. We need, first of all, price strength, right? We need this to not be doing what it's doing day after day after day, week after week. And then we, of course, need that fee. like I said, that fee needs to increase a lot. So basically you need not many shares available left to short, so they can't flood it as much. You need the price rising, so they're losing money that way, and then you need the fee incredibly high. So the longer that they're holding on to it, these days to cover, where they're just holding it and holding it, like here, that needs to be the pressure, the pressure components. Price rising, so they're losing money that way. Fee is very high, so they're losing money that way, and then they just kind of say, okay, forget it, like call it off. We need to close up shop here. And then if that happens in sort of this, repetitive, quick motion, that's when you get sort of this squeeze happening. You go back and look at the IPOE videos that I did way back just prior, maybe a month or two leading up to the finalization of the merger, like the actual ticker change, which I think was in June, if I'm remembering correctly. You'll see how a potential squeeze starts actually taking shape, because it did then. So we'll keep an eye on it, but it's lacking the most critical components for something like that to happen. But the flip side of that coin is, as shorts continue to pile in, that's going to just set it up so that maybe they get a bit overextended, overzealous, and that's when, if we can get the price moving and we can get the fee moving, if they're in neck deep, then that's where you want them to be. But again, the double-edged sword there is, it's a lot of selling pressure on a stock and in a big bear market right now. So it could be definitely more painful for the foreseeable future. And then just sort of like with the cross your fingers and hope that you can get a squeeze that sort of gets you out of hot water, maybe in a big way. But that's my 2 cents. Like I said, we'll keep tracking it and go from there. All right, folks, I hope you're holding up well on this hump day, and finding ways to, either sit and watch, study, or profit in this bear market. And in any case, I wish you the best of luck, and I appreciate you watching, and I will see you in the next video.